Welcome back. This is Beau, the host of the Investor Financing Podcast, and in today's discussion, we're going to talk about refinancing a vacant property with a DSCR loan. Before we jump into the answer, let's quickly refresh our memory about what DSCR actually means. DSCR stands for Debt Service Coverage Ratio, which is a crucial factor lenders consider when assessing a property's cash flow potential. Now, when it comes to refinancing a property that is currently vacant, there are a few things you need to keep in mind. First and foremost, lenders want to ensure that your investment can generate sufficient income to cover the debt. Typically, they use the rental income as a primary source for assessing the property's cash flow. So the question is, can you refinance with a DSCR loan if your property is vacant? The answer is yes, but with a few conditions. Lenders will require a rental survey to be conducted alongside the appraisal. The rental survey helps determine the potential rental income of the property once it's occupied. The rental survey involves assessing similar properties in the area to establish an accurate estimate of the rental rate that can be achieved. This information is then factored into the DSCR calculation to ensure that even in the absence of a tenant, the property's income potential still meets the lender's debt service coverage requirements. So if the rental survey and appraisal demonstrate that the projected rental income supports the DSCR requirements, you can indeed refinance your property even if it's currently vacant. It's worth mentioning that each lender may have their own specific guidelines and requirements. So it's important to work closely with a knowledgeable mortgage professional who can help you guide you through the refinancing process.
Hi, this is Beau Eckstein, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link.
Circling back on what we just discussed, a lot of our clients, they come back and they want to refinance. They usually buy with a fix and flip loan, and then they want to BRRRR the property and refinance with a DSCR loan. These are all no income doc requirements. It's based on cash flow, credit score, and LTV. That's how the rates are determined on these projects, these refinances. So a lot of people might rehab and then convert it to a short-term rental when they BRRRR out of it. So oftentimes we'll refinance the property when it's vacant, and so we'll use the rental survey. So it's important up front to know your goals and the exit strategy on how to determine. So I always typically ask, what's the long-term rental rate, even if it's going to be a short-term rental, because we have different DSCR lenders. Some will use projections based on AirDNA data. Some will say, we'll refinance if it's vacant as long as the long-term rental DSCR thresholds are met. So there's ways of structuring these deals. But at the end of the day, it is very achievable, whether it's a midterm, short-term, or long-term rental, to refinance a property that is vacant. Hope you enjoyed this episode, and please like and subscribe, and we'll see you on the next one.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.